All right. Hi everyone. So um good day, good evening, good morning, good afternoon. I don't know where you might be, but today I'm going to just briefly explain what I posted on my page about the trade entry. So basically, we all know that we were in a bearish market situation. Um we saw that market moved from this. Um let me connect my okay. One second. All right. So we all knew the market moved from this high. Okay, so market moved from this high, came down all the way to this low, to this high, came to this low, and then moved all the way to this high. You know, typically we are on a weekly time frame. Most of you would think that the market has shifted structure, considering the fact that it has broken this high in here. Okay, but basically market hasn't shifted structure right in here. Right, this is the weekly time frame. So sometimes, to be more certain about the shift in market structure, especially on the bigger time frame, consult a higher time frame. Okay, it gives a more clearer narrative of the market. All right. So typically, let's look at the monthly time frame and really confirm if market actually did break any structure. Okay. So on the monthly time frame, you could clearly tell that we moved from this high to there was a low in here, there's a high in here, all the way. We didn't have any low, although it had this low, but there wasn't any swing high in here. So we came so from this high, the next low that you probably might consider will be this. Where do we find the next low? I'm trying to be more certain. So we have, if you have a low, there should be a relative next swing. Let me take off the period separators so that we are more certain on what we are trying to show in here. Okay, so when we have a high in here, so for instance, a normal swing pattern, we should have a high. So for instance, we have a high, we have a low. So in as much as we have a high, wherever the next low is going to be formed, it should be accompanied by another high before we come to form another low. So for instance, if we have another low in here, which you can clearly see in here as a swing low, but just after it, we didn't have any other swing high and we had another low. So it means that this low wasn't actually a swing low. Okay, it was just liquidity that was built and then market had to just run it. All right, I think understanding this principle would really give you a good understanding of the market. Okay, so we didn't have any low in here all the way till we had this low, this current low, this low right in here. Okay, and then market had to form a high. So from this high, the next low that we can properly allocate is this low. Okay, so this low. So you could see that when we formed this low, the market actually went up higher to form this high. Okay, so if I was going to put indicate a line there for you to see, it will be from this high all the way to all the way to this low. Okay, so this is where we had the swing. Okay, this is where we have the swing. And then what was the next swing that happened on the market? See, understanding some of these things, you might take them for granted and say that, okay, well, these things are really not relevant, but they are so relevant to your profitability on the market. Okay, so now we have this swing high to this swing low, and then we have a high in here, and the market begins to break down. So in as much as market breaks below this low, it means that we continue our bearish trend. All right, but when we go here, market reversed a little. Bear in mind that from this high, there wasn't any high that was formed until this high, that this low that was formed in here before we formed this high. So all these areas are all low resistance liquidity runs that price just a little bit dipped into, and then we saw the reversal. Now, why did price reverse at this point? Okay, it has a reason. Price reversed. The reversal happened at this point for a reason. Now, you notice that anytime we have a bearish run, all the we may consider all the up close candles within a bearish run as order blocks. Okay, so beautifully, this particular bullish candle in here acted as an order block. Price traded into this order block, and then we saw a reversal. So if I could zoom in more, you could see that this bullish candle in here priced, when you grade it from the lower to the higher, when you grade it, you realize that price reversed exactly at the mean threshold of this order block, and then we see price gearing downwards. So on the weekly, you saw something more like a reversal, but it wasn't actually a reversal, because I was saying that if you have a high, the next thing that you should form is a low. So for instance, assuming this the close of this, or the low of this bearish candle in here formed a low. Alternatively, we should form another high. Okay, we should form another high. Sorry. Alternatively, we should form another high right in here after the low. But the high there wasn't any high that was formed. Okay, because these candles line up here. This high in here is higher than this, and this high in here is equally higher than this. So we don't have a three high pattern formed, and then we have price going back to sweep this low. It means that this low was just like this low that was formed in here. Okay, understanding of these things are very key and very principal to your becoming successful in executing trades. All right, and then price gets to this high, so officially we form a proper high in here, and then price begins to break down. So now price is seeking to attack this, the liquidity resting below this high in here. Okay, all right, so these are all sell side liquidities resting below this high, and price actually had to reverse and then trade into. So we use this order block, and when price traded into the order block, now we can go to the weekly time frame and confirm whether what we saw as a shift in structure was genuine. Okay, so you could see that all this area actually, market actually just built consolidation, and then price had to run the low of the consolidation and then the high of the consolidation, right? And then we saw price regurgitating downwards again to take the low resting in here. So now officially price has traded below this low. So we now have a swing high that has been formed in here. Now we are going to look at where the next swing low is going to be formed on the monthly time frame. Okay, so beautifully we have this swing going to happen. All right, so that's what we are expecting to happen currently on the market. So we are still in our bearish trend. Now price now trades to this area on the bearish market. Price now reverses, trades to this area, or sorry, expands from this area, takes this low. Now watch this. This area I explained in my previous video, so you can go and watch why I explained what I meant by this candle in here. It had to go and sweep this high, and then it did all this action, price action that it did over here. Now price trades into this area and see it leaves this fair value gap in here. What necessarily do you think is happening? Okay, what necessarily do you think is happening? So price has left a fair value gap in here, and why wouldn't price go back to it and then revisit and sweep the fair value gap resting in here? Well, it's for a reason. So what happened is that you see this down close candle in here. Okay, this down close candle. We want to see the price action that will happen at the end of this week. Should price close below the wick of this down close candle in here, then this down close candle, we consider it as a breaker. Okay, we consider it as a breaker, and we want to really see price trade into it and then reject. Ultimately, we've seen a price action here that is communicating to us that this down close candle in here ultimately could be a breaker. Okay, so we want to see what will happen on by the close of this week, so that we base on that and take our decision. Now let's go down further to our lower time frame, so that I give you a clear reason why I actually asked that we executed that trade that I saw today. So on the weekly, we go down to our daily time frame, and beautifully we could see how price traded into this area, into this fair value gap, and then we see price trading back down. Okay, so when price had traded into this fair value gap, ultimately we are looking at, let's go back to our weekly time frame and indicate the area where we have this fair value gap. Okay, so this is the fair value gap that price hasn't traded into. All right. So this is the fair value gap weekly. Now let's go down to our daily time frame. So this is the fair value gap that we're expecting price to necessarily go back to, and then do some justice in there. But for whatever reason, price hasn't gotten back to that area. Now let's look at why price reversed at this side. Okay, so price actually traded into this fair value gap, into this daily fair value gap, and then did the reversal. Okay, so this is it, beautifully into this daily fair value gap, and then we saw the reversal down. On the normal, we would have expected that whatever price was doing, would have expected that, well, price should necessarily, considering this swing high to this swing low, okay, considering this swing high to this swing low, we're expecting, if you're going to expect price to do any form of reversal, we want to see price go into premium before we want to see the discount prices. That is, price should retrace a little above the 50% level, which also overlaps with the weekly fair value gap. Okay, so we want to see price come into this area, react with the breaker blocks resting in here, as well as this consecutive up close candles, which also act as the other block. Having another fair value gap in here could even attract it more further, and then we want to see the reversal, but price never did that. Okay, so many people probably might be expecting that price should have gone to that side before seeing the rally down, but then price reverses in here. Now, what even gives you a telltale sign that price has actually reversed or done the reversal happening right in here, and that it wasn't going to go up higher? Now you go down to so let me take off this for you to also see. Let me take it out of the chart so that we know that we are not. Okay, so now price trace into this fair value gap. So now let's go down to our 4-hour time frame. Beautifully, on the 4-hour time frame, what we see right in here, on the 4-hour time frame, we could see how price traded into this daily fair value gap, bounced down, went up again into this area. Okay, and then we saw how price rallied away from this imbalance right in here. Okay, I'll take my time and take you through this form of fair value gap. When one fair value gap is overlapping another fair value gap inside of a bigger fair value gap, I'll take my time and give you um, a detailed lesson on this and how to engage such markets. Is a beautiful trade to really take. All right, so beautifully price did that, and then whatever it did, it broke structure right in here. Okay, so it broke the structure right in here, and just after it broke the structure, we had this consolidation happening in here. Okay, we had this market consolidating, and we saw the retracement leg higher into this fair value gap and into the daily fair value gap, and we saw a sudden breakdown. Okay, so price had to continue the expansion downwards. It did the expansion downwards, and then we saw the retracement. Price retraced into this area, into this fair value gap, which overlaps with this breaker, this down close candle, which acts as a breaker. Okay, price overlaps with it, and then we wouldn't want to see price go above this consolidation, this little consolidation right in here, to let us understand that the trend has actually been violated. So price had to stay inside of this breaker. So just like ICT always says, um, the candles, they are doing the talking, but the wicks are doing the damages. So you could see how beautifully priced the candle, the bodies of the price action here just overlaps with rejects at the tip of this breaker. Okay, and then the wick just had to go into the mean of the body of the breaker, and then we saw the sudden breakdown and all that. Okay, so inside of this price action was something beautiful that if you had not seen that there was a shift in structure here, and there was an expansion, and there was a retracement, and there's going to be another expansion, you would miss it. So inside in here, we have something that we have to go to 1-hour time frame to actually see. Okay, so ICT has been propagating this for a long time, that the market is always seeking to sweep liquidities. Okay, so when we had this low and then we had this retracement leg, coming up. Okay, this retracement leg actually traded into the breaker on the 1 hour, and then we saw a reversal. Now it trades back into this area, leaves this highs hanging in here, and then comes down again. We want to necessarily see price go below this low, but then it fails to do that, and then it returns. What it does is that it usually goes to sweep liquidity resting above this high. So this is what ICT usually term as the turtle soup. Okay, the turtle soup setups. Okay, so price actually goes up a little to sweep the high resting above this high, and then so this one it just did it by a very tiny pip. Okay, if you use your line, you could see that price actually just dipped in by a pip. Okay, and then we saw the sudden breakdown. So when I saw this happening, when price took the high in here and then it started the reverse, the expansion downwards. When you go down to the 15 minutes time frame, you will see things much better. So insofar as we have swept this high and we're looking at descending down, now price shift structure right in here, it gives you the clear sign that okay, well, the structure has shifted now. We have taken a high in here. We've swept the buy side liquidity resting above these areas. Then we have a shift in structure. We have a fair value gap. Price retraces into the fair value gap coupled with this breaker right in here, and this consecutive up close candle acting as the order block is enough confluence to tell you that we're going to shoot down. And beautifully, we saw how price had to break down and then came up here again and then continue the expansion downwards, and then we see all this price action happening right in here. Where could you probably have exited? You could probably have exited right in here. Okay, right beneath this low, you exit your trades. Now inside of this price action is what we can find a market maker model. Okay, so let me go down to my 5-minute time frame to give you a much clearer view of a market maker model, sell model that we have in here. So what do we see here? We have price doing this. So we have what we call the consolidation happening right in here. Okay, this is where we had the market consolidating. After the consolidation, what do we see? We had an expansion up higher. Okay, after the consolidation, we had price expanding higher, coming back into the consolidation, into the fair value gap, into the consolidation, and then we saw the expansion higher. And then we have, so this is the first leg of the market maker sell model. So this now becomes the reaccumulation. Okay, so this is the reaccumulation phase 1. It expands higher, forms a high in here, comes back again, reaccumulation phase 2. Okay, and then it expands higher, comes down. So you could have even ignored all this area, and then we have another clear swing high and swing low in here. So you can have this first one, and then all these can be consolidation considered within this, and then the other one now forms is this coming down in here, goes up, comes down again, and then we have the market structure shift happening right in here. Otherwise, you could also consider this from this high to this low as the second reaccumulation. And then what happens? After we had a shift in market structure happening right in here, market retraces into this fair value gap, and then we see the breakdown. So all the phases of the reaccumulation will be used. Okay, all the phases of the reaccumulation will be used. So beautifully, we see the first retracement up here. When you overlap this area, so let's put our lines and a fib in here and see how price overlaps. So when we see this area from the low of the second reaccumulation, okay, so from the low of it to the high of it, we could see how price traded into but didn't close above it, and then above the 50 level. So at the 75% level, that's OTE, ultimate trade entry, around this side, and then perfectly we have the breakdown. Okay, so it has dealt with the first stage. Now when it comes to the second stage, price came all the way to this low. Now watch this. Did this low break below this? Yes, it did, with the body of the candle. So now watch how price had to go back also into the second phase of the first phase of the reaccumulation. Okay, now price traded into, and watch this, price didn't close above the wicks didn't close above this. okay, telling that they are still staying within this first phase of reaccumulation, and then it continues to break down. And then this is where most people catch ICT beautiful trades. So in the second leg of the reaccumulation, usually we have this particular form of setup where price forms a high, comes down, and then comes to sweep the high, and then a very sharp rally to sweep beneath the consolidation. Okay, this thing also has a name that ICT called the silver bullet. Okay, so beautifully, this is what happens on the chart for volatility 75. The reason why I think I'm loving and enjoying the flow on volatility 75 and the other volatility indices is the pace at which they move. If you understand ICT's concepts and they work on it for you, I think it's good, because when we look at the other currency pairs that are being affected or manipulated by the news, days that sometimes your trades are being affected by news, it really goes down to your skin, and it's really not so easy to bear. So with volatility indices, if you're able to know where to enter and where to exit, I believe that it does you a lot of good. Okay, so this is a brief analysis of how I executed this trade, and I wish you all the best in your trading. And I still hold on to my trades anyway, so that's what is running on my chart currently. I wish you all the best in your trading, and I hope you do enjoy the rest of the evening. Until I see you in the next video, enjoy the rest of the moment.